Well, another one of these infomercials has been cluttering the airwaves on KABC radio in Los Angeles, and its online trading academy, or Power Trading Radio, hosted by one of these goons from the now defunct John and Jeff show, which used to air late night in Los Angeles on KLSX until 2009, so it's been about 7 years. When you're resigned to doing infomercials, that's when you know that the old radio career is pretty much over and done with. But putting that aside, Online Trading Academy. First question, has there ever been a paid infomercial where they tried to get you to come out to some free seminar that was worth your while, that wasn't trying to sell you some really overpriced and or inferior product like an annuity, index universal life insurance, a non-traded REIT, some market timing service, or how to get rich in real estate? Has there ever? How many times have you been told, never go to free seminars? But yet there's always people who somehow never got the memo. But so instead of get rich in real estate, this one is about how to be successful trading stocks. Okay. And just like every other infomercial that you hear on the radio selling a financial product or service, what are they doing? They're trying to appeal to people who are ignorant of diversification into bonds. People who are ignorant about how if you can't handle stock market risk, then you simply diversify into bonds. But Online Trading Academy, they're talking about people who got a 50% haircut in the market in 2008. Straw man argument. And the other straw man argument they use is to bash commission-hungry brokers and the expensive mutual funds that they sell. How convenient. Yeah, brokers are salesmen. You should avoid brokers. We know that. Brokers are non-fiduciaries. Nobody should ever go to a commission-based salesman who's going to try to sell you expensive products like actively managed mutual funds. What they should do is A, hire a fee-only fiduciary on a one-time or one-tax basis, or B, use a light advice service like Vanguard, which only charges about 0.3% per year, or use a robo-advisor, many of which are free, then invest in low-cost index funds. And if you're retired or retiring soon and money is tight, then the general advice for most people is that you want to take as much risk as is needed to achieve your retirement goals, but no more. In other words, don't swing for the fences with 100% of your money in stocks. But yet Online Trading Academy keeps presenting this straw man argument to appeal to people who don't know anything about bonds. Because if you're properly diversified into bonds, you don't worry about whether or not the stock market is going to crash next week, next month, or next year, because you already decided what your appetite for risk is and you stick with it. And if you're panicking and losing sleep when stocks drop 10%, 20%, 30%, 40%, 50%, it's your own fault for not being honest with yourself when you decided on your bond stock allocation ratio. You should have elected to put more in your bond index fund instead of your friggin' stock index fund. It wasn't the stock market's fault. It was your fault for failing to diversify. But Online Trading Academy, what is their solution for somebody who failed to diversify into bonds and got slammed in 2008? Oh, you need to learn how to become a day trader. Maybe you should start placing bets instead of being an investor. Anyway, so first question, how much does Online Trading Academy cost? And just the fact that they're advertising on the radio, that should tell you everything. But according to some posts on Yelp, the first class seems to be just a way to upsell a $300 3-day workshop. Then at the 3-day workshop, they try to pressure you to pay for increasingly more expensive classes, eventually summing up to $25,000 to $50,000. You have got to be kidding me. If you're paying $25,000 to $50,000 of your precious after-tax money for trading classes instead of reading some books, then you have no business trading stocks because you can't manage your money. You're loose with your money. Here's a novel idea for you. Are you ready for it? It's called Amazon.com, the bookstore. Save $49,900 while supplies last. But wait, before you even go to that trouble, here's an even better idea. Ask yourself the question, what percentage of people who study day trading are actually consistently making money? Now, of course, OTA claims that they get lots of positive reviews from graduates, but since their brokerage accounts are not audited, we don't know what percentage of these people are losing money, making money, recouping the cost of these expensive classes, etc. What they do within their brokerage account is their own private business. But what about day traders in general? Have there been any studies? Yes. And according to a study discussed on NASA.org, 70% of public traders will not only lose, but will almost certainly lose everything they invest. And only 11.5% of the sample evidenced the ability to conduct profitable short-term trading. And what about studies that specifically look at traders who use technical analysis in general? Well, apparently a New Zealand study found that out of more than 5,000 strategies that use technical analysis to trade stocks, none produced returns beyond what you'd expect by chance. But here's some other things to think about with regard to just trading in general. The smartest financial minds, guys like Bogle, Lynch, and Buffett, all say to just buy, hold, and rebalance. Day trading is not investing. It's like gambling. You're placing bets with your own real money. And no matter how good you may become at trading, you can still lose. And being a good day trader is a full-time job. To actually earn a living in the markets, you have to be the best. And because trading is a zero-sum game, for every person who makes money, somebody has to lose that money. And coupled with the law of averages and the law of large numbers, it's very difficult to actually be the winner all the time if you're placing lots of bets. And by the way, if you just break even, you're losing money because of the spread and trading costs. Also, there's different traders out there who all have different skill sets and approaches to trading that work at different times. Even the best traders at big institutions can lose money and lose money for sustained periods of time. That's why the big institutions spread out that risk by hiring all kinds of different traders. But you're just a little guy all by yourself with your money, not somebody else's money. And high-frequency computer trading has made it more difficult for humans to win. You might want to read this article. But anyway, the bottom line is that day trading, swing trading, position trading is not investing. Placing bets is not a substitute for investing. If you're just another investor out there who's trying to save for retirement, you need to buy, hold, and percentage rebalance low-cost stock and bond index funds. If you think it's fun to gamble, I would read some books, then maybe do some paper trading, see how that goes, and maybe if you want to take it a step further, maybe find an accredited school or university that teaches this stuff.